What's up, guys? Philip at Trade Genius. All right, in this video we're going to talk about the Bitcoin miners that are shorting the Bitcoin market. That means they're selling the Bitcoin futures. Futures that everyone thinks was the cause of our big downturn. Well, is this something to be concerned about? We're going to talk about that in this video, so let's check it out.
Trade Genius.
Okay, guys, so basically what it is there's futures markets, right? And so you can sell Bitcoin futures, and what that allows you to do is to profit if the Bitcoin price goes down. It's not physically backed by any Bitcoins, it's just a cash settled derivative. So if you've got deep enough pockets and you can open a margin account on one of the bigger futures exchanges, then you're able to short Bitcoin. Now, what the miners are doing is they're also shorting it, but they're doing it not so much as a gamble on Bitcoin dropping, but more as a hedge against that it's dropping. So think of it this way: if you are basically mining Bitcoin, and let's just say your break even is over here for the price of Bitcoin, okay? And Bitcoin is in this vicinity. What you might do is you might short somewhere in this range. In this range or down to here if you're a miner, because what'll that enable you to do is to sell those Bitcoins that you haven't mined yet. So let's just say you mine 30 Bitcoins in a month, then you could sell 30 contracts at these prices here at 4,200, and then you can actually once you actually mine the coins, figure out where the price is, sell those, you can close out this contract as a hedge. So if the price does dip below your break-even level, you kind of hedged against that because you've sold them higher, okay? So price drops, even though you have the physical ones, you can sell those. You might sell them at a loss, but actually not a loss because you hedged it with those future contracts that are now in profit. So that's what they're doing. So it's not necessarily like they're betting against their own market. It's just that they're hedging against losses. Where this gets a little more interesting is when you have price levels that are now existing below break-even point, and you've now finished that hedge, but now you've got price points that are below your break-even cost. So this is where it gets a little more tricky. So that's the game. That's the chess game that these miners are playing. It can get more complicated. The strategies of hedging can get more complicated, but essentially that's like the real simple way to look at it, as they're selling at higher prices on the futures market, and then if price does drop, they get the profits from that futures bet, and then the difference between that and what they're actually selling at a loss because of their break-even costs are underwater evens that out. So it works when you're able to sell it above the break-even price, but when you're below your break-even price on the futures market, that's where it can get a little tricky. So therein lies the problem. But again, it works when the price is above their break-even point, not so much when it's below it. So anyway, guys, thought I would point it out that that information came out about the Chinese miners in particular short selling to hedge their production costs, and I just wanted to kind of explain that a little bit more. So obviously this is just a hedging mechanism, and it's not really, I would say, anything that would affect the market. People think that futures are bad for the Bitcoin market. There's still not a ton of volume on the futures market to the extent that I would say that really caused the top and everything like that. I think it was just coincided with people running up to that futures announcement, and then when it was done, the top was in, and it's just a matter of there's now less buyers than sellers after that. A lot of buyers ran up into that, and then there just wasn't any more buyers at that point. So, and as with Bitcoin, it just continues to have these large 80 to 90% pullbacks, so which are historically great opportunities to add to long-term positions. And so I don't see that as any different this time. All right, guys, well, I hope that explanation helps. If you've got any questions, leave them below. As always, please hit like and subscribe. We appreciate it. And also, if you're interested in any of our products, head over to tradelikeagenius.com, and you can see our specials running there. All right, guys, thanks for watching. Take care.
Trade Genius.